Hey, I'm excited to welcome Pat Gately from Leyton. We're going to talk to this video. Welcome everyone from the Teaching Tax Law community. We've been wanting to talk about this for quite a while and waiting for that right expert to partner with. So we're here to talk about property tax challenges and abatements. Many taxpayers don't understand that you can challenge your property tax assessments, both on any commercial property or residential property. And remember, the goal in teaching tax flow: legally and ethically reduce the tax you pay in your lifetime. That's not just income tax. We're working towards all different types of tax reduction as long as it's legal and ethical. So, Pat, welcome to the teaching tax flow community. How are you doing today? And can you give us a little introduction?
Chris, thank you for having me. Wonderful to be here and part of the community. And I guess to provide a little introduction on Leyton to start, we've been around for 28 years, operating in now 17 different countries with our new office opened in Greece this year. So maybe I'll get a little vacation.
Oh, might
Um,
get a euro
eh,
out there or something.
that would be wonderful. A fresh lamb gyro. And then we also just opened a couple of new offices here in the U.S., in New York City and Phoenix, alongside our Boston headquarters. Here in the U.S., our office in Houston, Texas, and our office in San Francisco. So outside of that, we really focus on all things property tax, and have a couple of other practices. Our property tax product sits in our commercial real estate practice. We have an innovation practice, which we recorded a video on grants about. So feel free to go check that out. And then we also have a state and local tax practice, which will be in another video. So I'm sure that'll be linked somewhere here on the profile. And looking forward to really diving into the world of property tax today.
Right. So, what is a property tax challenge and abatement request?
That's a great question. At a high level, it's a opportunity for the taxpayer to make sure that the county, right? There's over 3,000 counties that I'm aware of. I think it's probably much higher than that across the U.S. But each county has their different rules or rates on property taxes and how they assess value. So when we're looking at a building, we look at it on a building by building basis to really understand, how is this property generating income? How is this property being evaluated? And really get the story from the owner as to what is the life that this property has lived. And then from there, we can understand the valuations. Are there different areas that aren't being utilized? Are there different areas under renovation? So on and so forth. So it really starts with understanding the life of the property and then going from there based on the county's deadlines, rates, valuation processes, so on and so forth.
So we're talking about, for the listeners and viewers of this, you own a commercial building. Let's talk about commercial buildings to start. You own a commercial building. Each year, you're provided from your county and or local taxing authority a property tax evaluation or valuation, whatever you want to call it. And at that point, the county, let's say county for this point, is assessing a property tax based on the fact pattern of the building. And what people don't understand is that they have a right to disagree with that. Is that fair to say?
100%. I think that's the easiest way to say it, is that if you disagree, you have the opportunity to go to the county and say, hey, I don't agree with you. Can we look at this together? And you need someone that has experience by your side to make sure that the county isn't going to, I guess, try and take advantage of you or just kind of shoo you out the door, but walking in with numbers and data to back up your claim about why you don't agree.
Right. So I want people to think in this way. Imagine that the assessment is a letter from the IRS. And for many, many people, they get a letter from the IRS. They have the right to actually disagree with it. And maybe it could be an audit. It could be, hey, we're not allowing this deduction, or we think you have this income. And usually when people say, I don't agree with this IRS letter, it's in the taxpayer's favor. Now the IRS only sends letters out to maybe 1.5% of all taxpayers. Assessors are sending assessment letters out to every piece of commercial property in the county, right? So there are going to be mistakes made and misunderstandings just by the pure volume of the assessments that have to get made, and you and your team help people determine that. So that's where I want to touch on our property tax challenges and abatements specifically for commercial property, or are multifamily or residential property eligible for this as well?
Multifamily and residential properties, specifically income generating properties, are the best candidates to do this. We see that the reason why is, to your point, Chris, that you just mentioned, that I was going to go into, the sheer volume. They're doing an extremely high amount of properties, right? Every single property in the USA gets an assessment every single year. And so they have to be able to do it in a timely manner. And sometimes that means just throwing out a blanket tax rate for a lot of different areas. And that maybe most of the time shouldn't be the case. So it's a proactive approach to property tax and giving you like a sense of control on what the county is telling you your business is doing.
So I want to ask you a couple of questions as we put a bow on this. As far as first question, what properties are great candidates for a property tax challenge and abatement request? And what's the process for actually moving forward? Because I know your firm, for instance, has a lot of offices, but you don't necessarily, if they, and someone could do a property tax challenge on their own, just like you could represent yourself in an audit too. You don't have to necessarily be in a location where you have an office. You could work with someone virtually, I would assume. But most importantly, what properties are great candidates for this? What are the triggering effects? Maybe it might be an addition, maybe it might be an ownership change. And then what's the first steps involved in this? And can someone go back and reclaim money from the past? I know I threw a lot of questions at you, but that's all right. We're going to finish with a fury.
I love it. I love it. So to talk about candidates first, the first question, I guess property type is not where I'm going to start here. I'm going to start with, have there been recent changes to the property? To your point, has there been an addition? Are there floors or suites that are currently under renovation, that are, yes, for lack of a better term, mothballed, right? Just vacant. Benchmarking where we stand against other properties that are similar to ours. Have you ever done a property tax assessment? If you've never done an assessment, then it's a good opportunity to do one to make sure that we can identify if there's been an overassessment. So I guess great candidates, if I were to list them, number one would be those that have never done a property tax assessment.
Right.
They are the most ideal candidates. Number two, those that have undergone recent property changes. Number three, I would say if they're suites, and I guess this kind of falls under the recent property changes, but if there are suites under renovation,
Right.
or those that have maybe seen a rise in vacancy in their properties. So those are kind of, I'd say, the top three candidates that we would look at, regardless of building type, whether it's commercial, multifamily, residential, any of those, because those are typically the biggest drivers that we see in property tax.
Got it. And then I'm gonna ask you about that process. But so if you're for people that are watching, or folks that are listening, I want you to think about something. And we've all been in this situation. Have we ever been to maybe a restaurant that isn't the most efficiently run, It's maybe you're going to a ball game and there's just tons of people ordering things and it's chaos. And they give you the bill. You look at it and you say, this is wrong, right? I know I ordered, 2 drinks and this appetizer, and you've got 3 appetizers on here and 4 drinks. And when you present it to the server, they say, you're right. That's just we've got to crank a bill out for everyone. That's kind of like looking at that property tag, like, hey, I think this is wrong. You're not being malicious, government, but I want you to look at this and assess me a fair amount. So that's why I'm looking at this.
100%. And to go into the process of what it's like for the review, when we're doing the review, right, we get the story, we get the understanding of the life that the building has lived. And then from there, we create our own calculations. We benchmark against other buildings and do cost analysis for comparable buildings in the area. And then once we have all that data, we bring it to the tax assessor's office, and we sit down and have a conversation with them, saying, okay, this is how much income we generate. This is the value of the building. This is where we think your rate is off, and this is where we see other rates for similar properties. And it's at that point a negotiation, right?
Right.
And when we have all the data to back ourselves up, to pre-roll property values, any final assessment notices that they're sending out, all that kind of data, we can look at them and say, hey, you know what, the assessed value should be lower. And
Sure.
on average, when a property is overassessed, we typically find an 8 to 12% reduction in property tax.
Gotcha. And can you go back into previous years, or will this affect the future years?
This will affect the future years. It's not really refundable per
Sure.
se, like the refund reviews that I know we'll talk about in a separate video. But it has an immediate impact on your cash flow with the savings that you generate from not overpaying in property tax.
Absolutely. Well, Pat, thank you so much. We're going to put your information in the video. Thanks for watching. Hey, do you own commercial property or any type of income producing property? Let us know in the comments if you've ever done a property tax review, or if you have questions about it. We're happy to help. Remember, legally and ethically reducing the tax you pay in your lifetime. That's not always income tax. Tax is your tax is your largest expense in your lifetime, and we're here to help out here in Teaching Tax Flow. Pat, thanks, and have an awesome rest of the day.
Thank you, Chris. Appreciate it. Glad to be part of the community.
The information in this podcast is educational and general in nature. It reflects the opinions of Teaching Tax Flow and does not take into consideration the viewer's personal circumstances. It is not intended to be a substitute for individualized financial, legal, or tax advice. Consult the appropriate qualified professional prior to making any decisions. Securities are offered and supervised through Cabin Securities Inc. member, FINRA, SIPC. Investment advisory services are offered and supervised through Cabin Advisors LLC, an SEC registered investment advisor. Chris Picciuro is a registered representative of Cabin Securities and an investment advisor representative with Cabin Advisors LLC. Teaching Tax Flow is an independent entity and is not affiliated with Cabin Securities or Cabin Advisors.